ING Wholesale Banking. Thank you so much for joining us this morning. So let's kick off with euro-dollar. We are seeing the euro-dollar move a little bit higher this morning, but that's mainly because of dollar weakness ahead of Ben Bernanke. And do you actually think that the euro could break below the 120 level?
Yeah, I would say that's certainly possible. Not immediately, but the daily chart of the past 12 months are clearly showing we're in a longer-term downtrend. After making new short-term lows below the previous low at 1.2286, prices successfully tested the next horizontal support level at 1.2160, and this level corresponds to the July low of 2010. And from here, prices are somewhat finding support, recovering, but upside potential is very limited. Horizontal resistance starts at 1.2325, but looking at the daily chart, we should be prepared for a test of this horizontal resistance at 1.2430, and the declining 50-day moving average line is today at 1.2540. So we recommend selling strength towards 1.2430 for the next decline in the downtrend below 1.2160.
You also brought us the IBEX, the Spanish market index. This is actually the biggest underperformer in Europe this year. Year-to-date is down more than 22%, I believe. Are you still bearish on that index, or do you think it can actually break out of that role and actually outperform?
No, I believe that this underperformance is likely to be continued, because looking at the daily line chart of the past 6 months, this price chart is again weakening rapidly. Because yesterday's close below this upper sloping trend line at 65.80 is already bearish and suggests that the downtrend could be resumed anytime soon. What we'd like to see to confirm this negative scenario is a close below the June lows of 65.28 to 65.30. So if prices are breaking and closing below these two lows, we should be prepared for at least a test of the June lows, 6,056, and likely lower.
All right, finally, let's
only
take
a close, but the 50-day moving average line.
Okay. Finally, let's take a look at the Nasdaq 100. The recent weakness, do you believe that from a technical perspective that's a buying opportunity?
No, I don't think so. Because looking at this longer-term weekly chart since the beginning of this century, so we're looking back to the past 12 years, and I consider this as almost as a longer-term textbook technical analysis chart. This year's highs, just below 2,800, was indeed a test of the upper end of the upper sloping trend channel, and from there prices started to decline, and we are currently arrived at the intermediate upper sloping trend line started from its March 09 lows, and this trend line is around 2,500. So as long as this trend line remains intact, but it seems to be likely that it will be broken in the coming weeks, then we have a trend change, and this means that we could easily fall towards the next solid horizontal support level around the 2,000 level. And this means after prices are closing on a weekly basis below 2,500, we could easily see a correction between 15 to 20% in the weeks thereafter. So that's, I believe this index is crucial, and I like to follow this market closely.
Okay, thank you so much, Roelof van den Akker, Senior Technical Analyst at ING Wholesale Banking.